Hello and welcome to Mindfully Trading. My name is Emily and in this video I'm going to show you where to place a trade using a very simple trend-based strategy that you can use for day trading. I'm going to go through every part of the strategy. I've broken it up into 8 steps, making it really simple and easy to follow. I currently use this strategy to trade the Forex majors, but you can certainly apply it to other assets, other market classes. Have a go for yourself. Obviously, think about your risk, have a go in a demo before you go live. I'm not telling you to jump straight onto a live account, but this is a brilliant strategy that I am sharing with you for free today, and all I ask for in return is that you like this video and subscribe if you're not already subscribed to the channel. Before we dive in, just a quick shout out in case you've missed it, that I am very close to launching the Mindset Mastery program for traders. If you struggle with trading psychology or you feel like you get overwhelmed by emotions and they take over when you are trading, then this program will be for you. There's more information in the description below and a link where you can join the waiting list for free. Just before we jump onto TradingView, I'm just in my broker here in MetaTrader 5. This is the trading account that I use with the prop firm, the 5%ers. I currently trade the Hypergrowth program. I have a real account of $40,000 and I'll talk more about that later in the video. But I wanted to go into the history so that you can see the real trade data here, because the trade that we're going to use for the demonstration today for the strategy has been taken from a real trade that I placed in the real markets trading pound dollar this week on the 7th of April. Let's get straight into step number 1. As part of this trend-based day trading strategy, step number 1 is to, of course, find an existing trend. This strategy, just to give you an overview of this strategy, I use this to day trade and I use this mainly on the 15-minute time frame. But you can apply this on a larger time frame if you want to use it for swing trading using a larger time frame following very similar concepts. Now, there are a couple of ways of finding a trend. You may prefer to use the larger time frame, the daily time frame. It's the most respected, it's used by a lot of institutions and banks, and it can give you a lot of information just in one candlestick. I've gone back in time using the backtesting tool to the start of this week before I took my trade. And this is what I saw on pound dollar. Using the daily time frame, you can see that price has been coming up in an uptrend, made a new little pullback low here, double bottom, it pushed up higher, we got a big wick rejection and a large bearish candlestick down on the Friday, bringing us straight back into this range here. Because this pullback wasn't actually broken and closed below with the body, it is still considered to be in an uptrend. However, because of the way that we made a new high and then Friday that we closed below very strongly, there's a high chance that price is going to continue to come down for a deeper pullback. And this is why I prefer to use a faster time frame like the 15 minutes, because it just gives you a lot more information. This is the same structure that we were looking at just a moment before on the daily time frame, but you can see a lot more information on the 15 minutes. Mostly this pattern here, price broke and made a new high. But looking at price action, you can see very clearly just using the peaks that we came down, we consolidated for quite a while and we had a big drop down, we had a pullback and a big drop down. Now, this is the start of a short-term bearish trend establishing, because we're getting a lot of momentum pushes down, pullbacks up and momentum pushes down. Moving this on in time to early Monday morning, I am based here in the UK, so any time that I use is going to be GMT, and this is around about 6 o'clock a.m. Monday morning. Another way of finding out the trend, if you prefer to just go straight to the faster time frame and don't want to look at the daily, you can use an indicator. And I use this free indicator. It's brilliant. It is called the daily high or low. You can go into indicators here and type in daily high/low, and there's a few different variations here. All it does is it adds on these two lines. The top light blue line represents the previous daily high, so that was Friday's high, and the bottom blue line, the dark blue line, represents the previous daily low, so this was Friday's low. This indicator alone is perfect for helping to find trends or identify momentum in the market. So we're still on step 1, which is finding a trend, and just by adding the simple indicator Monday morning 6 a.m. GMT, you can see that price has already opened below the previous daily low. So price has opened and gapped down. We've already gotten a break below the previous daily low, which is already a very bearish indicator to the start of the day. And looking at Friday's price action as well, we can see that Friday we also got a break below the previous daily low. So that was breaking Thursday's low. So we're seeing this short-term downtrend forming where price has broken previous daily low and broken another previous daily low. These key daily levels are being violated, and it is creating this short-term trend that we as day traders can capitalize on by taking short entries and quick exits, capitalizing on these market movements. But the big question is where to get in. Well, this moves into step number 2, which is to wait for a pullback. We don't want to get short at the bottom of this move. We want to wait for price to pull back. But you may be wondering, well, where does it pull back to? Where is the best place to get in? You can calculate an entry from a pullback in a variety of different ways. Some people like to use indicators such as moving averages, and whilst they are certainly a technique you can use, they're not always reliable, which is why I personally do not incorporate them into my trading plan. What I prefer to use is a combination of price action and Fibonacci retracement. This is something I have been using for a long time with my day trading, and it has proven to be consistently profitable in the long run. I have created a separate video which talks in more detail about the Fibonacci retracement tool, so if you want to check that out, there is a link above somewhere. The best way to set up your Fib tool is firstly to analyze price action, and we're going to keep this very simple. So I'm going to look back at the previous day's candlesticks because we don't have very much for Monday. We want to look at the long leg that we had to calculate the best entry for pullback. So from Friday's high, we came down, we came to this previous daily level, the key level here. Price pulled back. You want to look at the highest point of the pullback before price broke the low, which was down here. We have another low forming right here before we got a pullback, and price continues Friday afternoon with these little drops and little pullbacks. There's one right here, but this one here was the last pullback before we then just gapped down here, because this is within this one, and created the new low, which was the low of the Monday's trading day. During the Asian session of Monday morning, price has been pulling back, and it's actually broken this body here of this previous pullback. So we violated this one. So you may be wondering, well, which pullback do we use? Do we use the deeper one? Do we use one of these? There is no secret sauce to this. There's no secret answer. You could use this one, but it might not pull back that much, and then you may miss out on an opportunity. So personally, what I would do is I would go from the previous most obvious pullback before this one, which would be this one right here, because after this pullback, price is sliding. It is just sliding lower. And we've already violated this pullback here. So I would use my Fibonacci tool and I would drop it at the high using the bodies only of this pullback right here. And then I would drop the low at the low of the day, the lowest point of the swing that we want to use for this pullback. And I'm going to remove the tool there so it's a bit more clear. And as you place your Fibonacci retracement tool, it may look different to mine. Once again, I go over my settings that I use in my Fibonacci retracement video. But I like to use these 3 levels. They're called the optimum trade entry. They are the 62%, 70%, and 79% levels. And they just provide a very high accuracy for trade entry. Some people prefer to use the 50% level for a fib. Some even use a 38% level, which is all the way down here. Personally, I find these to be more predictable for entries. Moving on into step number 4, and you have a couple of options here because no trader is the same. We all have our own trading styles, and some people prefer high risk, some people prefer a more conservative approach. And breaking those two apart, a conservative approach in step number 4 would be to wait for a candlestick signal before you get into a trade, whereas a higher risk approach would be to just set the order. So what exactly do I mean? Well, if you're looking at this chart here and you've drawn your fib, if you're a high risk taker, you may just decide that you're going to set a sell order at this lowest point here of the fib and set your stop and set your target and leave it to work itself out. If you are a conservative trader, you may want to wait for that additional confirmation before you get into your trade. So you may decide to set an alert here so that you get notified when price returns to this area and then watch it in real time, waiting for a candlestick signal before getting into the trade. That is what I decided to do because I do prefer to watch price and get that confirmation before I get in. Now, when I set this trade at about 6 o'clock in the morning GMT, before my little preschoolers took over on the day, you may notice that there is already a candlestick signal present. Can you see it? It happened during the Asian session. Price pulled up into the OTE area and we got this very large wick rejection. This is a pin bar. It pushed up and it immediately pushed back down, rejecting this area. That would be, in my opinion, a candlestick signal that you could use to place an entry for a short. Once you have your signal, or if you're happy taking the high risk approach and just setting your order, you are ready to place your order. Which moves us into step number 6. If you are, like me, setting an order above where you want to get in, you'll be using a sell limit order. So you'll be waiting for price to push up and trigger your entry short, and then hopefully drop into your target. And for my trade here, for my stop, I decided to use a 20 pip stop, which placed my stop above this highest point of the pin bar, because if price broke that, we're probably going to see an uptrend forming on this intraday movement. I wanted price to stay below this level. And for my target, to begin with, I felt that price had the potential to really drop because I was watching some key daily levels and I thought price would be drawn all the way down here. But I decided to just keep it short for now, and I set a 2R target. I set my sell order, my stop loss, and my take profit in my broker, which meant that I didn't have to be watching the charts. And I set an alert at those points as well, so that my phone would tell me when I got into the trade and when I got out of the trade, and whether it was a loss or a win. And before I show you the resolution of the trade, this can kind of lead me into step number 7, where to take a take profit. A lot of people sometimes get confused with this. And I mentioned before about the key daily structure. There are pretty much 2 ways of setting a take profit, as I just demonstrated. You can use something on the charts, a structure, a price action. You may even prefer an indicator to aim for, or you may prefer to just use risk. So this is basically looking at what you're risking for the trade. So I'm risking 20 pips. You want it to be a positive profit loss ratio. You want to make more than you are risking. So if you're risking 20 pips, you want to be making at least 30 pips, if not more. That's why I've used 40 pips here, because I'm going to double what I am risking on this trade. It's a positive return on my risk. If you're wanting to use structure, this is where you could step up to a faster time frame, or just zoom out on the one that you're in and just have a look at where price is likely to return to. So there's a lot of candlesticks here. You may see some resistance here. That could be a nice point for a target. That's 1.2715. 1.2715 is all the way down here. So, I mean, that is a 10R target. That is where you would demonstrate structure. But that's quite a large target to reach for. If you're doing something like that, you may want to set alerts on the way, maybe trail a stop loss, or maybe even take off partial positions of profits along the way. But returning my take profit to the original 2R, let's see how this trade played out. I'm just going to pause it there because price pushed up, it triggered me in. We came down quite close to my target, but it didn't hit, so I'm still in the trade. Pushed back up, quite close to the stop, and then back down again. And in this choppy bit of price action, which is why I don't really enjoy trading London session too much, it can get choppy. There are also some candlestick signals. So you've got extra signals here of confirmation to get into the trade. So firstly, there's one here. We had a bullish bar push up, an inside bar forming. Price didn't break the high or the low of that green candlestick. And then the third candlestick, we got a break below both coming down. This would be a bearish inside bar break. So that's another confirmation to get short. If you didn't on that one, you also had another option here where we had a bullish candlestick and another bearish one forming. Now, it's not really clear on the 15-minute, but if I drop to a faster time frame like the 5-minute, this provides a nice confirmation on this candlestick here, where we have the bullish one up, but we have this large pin bar rejection again. And the next candlestick at 8:15 that formed on the 5-minute was a bearish pin bar, and it broke and closed below the low of the previous one. So that would have been a nice candlestick to use as well. But continuing on with price, and you can see that towards the end of the London session, 9 o'clock, price came down and it hit my 2R target, which was brilliant. I made over $200 in just a couple of hours in the morning. In fact, that was mostly 15 minutes of analyzing, setting my orders, setting my stops, setting my target, setting my alerts. I did all that in about 50 minutes. Then I went and got breakfast for my boys, and I think we went out and did our food shop that morning. So it's not a bad return on time. couple of $100s in 15 minutes. This is where trading can sometimes get into your head, and it's really important to be aware of emotions. And we're going to round this off with step number 8, which can be overlooked. It's really important, and that is to review your trade. Every winner, every loser, every trade has something to teach you. It's really important to review and journal in a way that's right for you. Personally, I like to take a screenshot of my chart. I like to write on any annotations that I learned from this trade on the chart, screenshot it, save it on the computer so that I have that data. I keep a digital journal. I have journaled lots of different ways in the past. I've kept a written journal, I've kept an online written journal. If I play this on, you can see that during the New York session, we had a few pullbacks, but towards the end of the day, price came down. It came down to that original level we looked at, the 1.2715. The original level that I considered having a larger target for, which would have made a 10R, 10 times what I was risking for the trade. So I was risking $120. I could have made $1,000 in that morning if I had just left that original target. With trading, you can never really think like that, because you never know that a trade is going to play out perfectly. And if you did this every time, the amount of times it would turn back on you and not work out would just be so frustrating, and you wouldn't make anything. But still, this is really good to use as a learning practice. So for me personally with this, I could have done this a little bit differently. I could have opened up 2 positions. I could have taken some profits at 2R. I could have left a runner. I could have done a few different things to maybe make some more money on this trade. Earlier in the video, I mentioned that I was trading the hypergrowth program with the prop firm, the 5%ers. The 5%ers are a prop firm. It means that you trade their company account and you both take a share of any profits made on the account. Now, you do have to pass a challenge to prove your skills as a trader to be able to do that. So if you feel like you are a consistently profitable trader, you feel like you're ready to take on the challenge of a prop firm, this may be an option for you. And I definitely recommend the 5%ers. I've been trading with them for years now. They offer a few different programs here for funding options, and hypergrowth is the one that I'm enrolled on. And I'm just going to share my favorite thing about the program. They have a growth plan. So I am in level 2 at the moment, $40,000. Every time I hit 10% in profits, $4,000, I will double my account size. So I will double up to an $80,000 account size. When I repeat that process, it doubles to $160,000, and that will repeat until it has doubled to a $4 million account size. Now, I don't expect this to happen overnight, but this just gives me a beautiful goal in mind with my trading. It helps with my psychology. It helps me to stay focused and to appreciate every small win, every step forwards, because I know that I am scaling up my account and that those bigger wins are going to come. So if you want some more information about the 5%ers, I've created a separate video, or there is a link below in the description. Please check them out. In conclusion, there are many different strategies that you can use for trading. What I have just shared with you is a very simple strategy that you can use for following the trend. Perfect for day trading. If you want to try it out on different assets, if you want to try it out on gold or crypto or even stocks, remember to have a go in a simulated account, a paper or a demo. Don't jump straight to risking real money. If you do, it is at your own risk. I'm certainly not advocating that. But please let me know how you get on in the comments below. I'd be super interested to hear from you. Meanwhile, if you've enjoyed the video, do let me know by hitting that like button. Don't forget to subscribe to the channel, and I'll catch you in my next video. Thanks for watching. Bye.